This is Matthew Cratter from Trade University, and today I want to answer the question, is Bitcoin controlled by the rich and powerful? And this is a question that takes many different forms, so make sure you watch this video all the way to the end. I'm going to be talking about the different forms of this question. The first form is something like this: Bitcoin instantiates a lot of wealth inequality. Just like the traditional fiat system, people will say that Bitcoin is highly concentrated in a few hands. And you'll see statistics like this, something like the top 10% of Bitcoin addresses control 99% of the coins. This is a very misleading statistic because when you actually go and look at these top addresses, they are all controlled by crypto exchanges. This first one here is Binance, Bitfinex, OKX. These are all crypto exchanges, and what we're looking at here are actually the cold wallets for these exchanges. And so this, when we see here that Binance owns 288,126 Bitcoin, it obviously owns these Bitcoin for all of the retail investors that are leaving their coins on the exchange. Even number 3 here, for example, the top third address, if we look it up, there's a good chance that this is the Bittrex exchange. So these concentrated holdings are really crypto exchanges that are holding Bitcoin for millions of small retail investors. If you're still leaving your Bitcoin on an exchange, you really should not do that. This is what happened with Mt. Gox. Your Bitcoin can be lost or hacked or stolen, or your account frozen. So it's very important to hold your own keys. Withdraw your Bitcoin, hold it on a Trezor or Blockstream Jade hardware wallet. But this first statistic, as we said, is very misleading because these large holders of Bitcoin are actually exchanges, and they are held by they are holding Bitcoin for many small retail investors. In the same way, if you look at the top 10 owners of Microsoft, we have Vanguard, we have BlackRock, etc. And we could say that these owners are very concentrated, but again, these are mutual funds. These are institutional investors for the most part that hold Microsoft for smaller investors who might hold it, might own part of an index fund or something like that. The second thing that we should know is that there are OGs in Bitcoin. They're these long-term hodlers who got in very early. Many of them are computer scientists or cryptographers, we can infer, or libertarians. And these are people who figured out Bitcoin very early on. They weren't necessarily the rich and the powerful. They were sort of a geeky squad of people. But these long-term hodlers, these OGs, their supply of Bitcoin, their holdings of Bitcoin are slowly being dispersed over time. This is an empirical fact. And we can see this when we look at the hodl waves. Unchained Capital puts this out where we can see the UTXO age distribution, and we can see, for example, the purple here, which are the holders of Bitcoin that have been haven't moved their Bitcoin for more than 10 years, that this group is slowly declining. All of these hodl waves trend downwards, which shows that the Bitcoin is being distributed. It's being sold, and this makes sense as Bitcoin rises in price. The longer you've been holding it, you might want to peel off a little bit and sell it to fund your lifestyle. This is not something that I'm going to do. I'm never going to sell my Bitcoin, but it can't be denied, especially looking at these hodl waves, that Bitcoin distribution is spreading, and that these concentrated holders, these old OGs, are selling down their positions. We can also see this when we look at the number of addresses that are holding a minimum amount of Bitcoin. This red line that's skyrocketing here, these are addresses that hold greater than 0.001. And we can see here that the really large holders that hold more than 10 is fairly flat by comparison. If you're finding this video helpful so far, be sure to hit that subscribe and like button. Maybe share this video with a few friends too who are becoming interested in Bitcoin. There's another question that's related to this question of wealth concentration in Bitcoin, and the background on it is really what happens on Wall Street, what happens in politics, especially US politics, but also politics around the world. And this is the system of oligarchy and kleptocracy ruled by the rich. In other words, the more money you have, the more you get to make the rules, the closer you can stand to the Wall Street and Federal Reserve money printers. But the thing about Bitcoin is even if you have lots of money and power, you don't get to make the rules with Bitcoin. You also cannot stand next to the money printer. You can't print out more Bitcoin than the 21 million cap. We can see this. A very good example in Bitcoin of the rich and powerful not getting to make the rules is the whole New York agreement. This was the SegWit 2x controversy back in 2017. And this was a plan that was supported by the rich and the powerful holders of Bitcoin and the companies in the Bitcoin ecosystem. This was a plan to double the Bitcoin block size, and it was backed by Barry Silbert and the Digital Currency Group, which has issued GBTC, Brian Armstrong and Coinbase, some of the other crypto exchanges, BitGo, which is a large Bitcoin custodian. I believe they were recently bought by Digital Currency Group, but they were very powerful back in their own day. And then, of course, Jihan Wu and Bitmain, who were the dominant makers of Bitcoin mining machines called ASICs. So we basically had a plan to change the Bitcoin protocol. It was controlled and it was put forward by all of these really wealthy and powerful people. And it was also supported by Bitcoin miners. In fact, 83% of the hashing power was behind this proposal. You can read this blog post by the Digital Currency Group from May of 2017, basically talking about all the powerful groups that they lined up. 58 countries, 58 companies in 22 countries, 83% of the hashing power, and all of these Bitcoin wallets. So who won this? What actually happened? Well, it turns out that the backers of SegWit 2x, everyone who signed this New York agreement, had to cancel their plans, and the block size of Bitcoin was not increased. And this is a very interesting historical episode because it shows us that the Bitcoin full nodes are actually in charge of the network. You can change Bitcoin, but you cannot force those who run Bitcoin full nodes to run your changed new software. So it's not the miners, it's not the large private companies or publicly traded companies in the Bitcoin space that control the protocol, but it's really the full nodes who have a say in this and are really in charge, and they're the ones who won the block scaling fights of 2017, especially SegWit 2x. We can see here a map of Bitcoin full nodes. This is the ones that at least we know exist, and we can see how they're really dispersed all over the world. This is what we mean. One of the things we mean by the decentralization of Bitcoin. Another related question to the rich and the powerful controlling Bitcoin is this question about Bitcoin whales, quote unquote, manipulating the market. This is something that I'm less worried about than other people. You can certainly, if you're a large Bitcoin whale, you own a lot of Bitcoin, you can quickly dump a few $1 billion worth of Bitcoin, drive down the price temporarily, trigger a bunch of stops, especially the stops of leveraged traders, and so they have to liquidate. But then when you try to put your position back on, you will end up driving the market back up. This kind of manipulation is not as easy as it sounds, and I know this from firsthand experience. In my old hedge fund, I put on multi-billion-dollar trades, and again, depending on the size of the market and the liquidity, you can move the market more or less. But I can guarantee you that this sort of strategy where you dump on a market and then try to buy back in, and I'm not saying that's something that we did, but just from my experience on the trading desk and seeing how liquidity works, seeing how large orders are executed, it's not easy to get in and out quickly. Again, you can dump and drive the market down, but then when you try to put back on your original position, you'll get a little bit of extra liquidity from those people who are being liquidated, but it's not, I just don't think it's as profitable as people think it is. But for the sake of argument, let's just assume that Bitcoin's price is manipulated by whales. I'll just concede the premise. So what happens if Bitcoin whales temporarily crash the market? What happens is it's good for long-term hodlers like you and me who can buy up more Bitcoin at lower prices. If Bitcoin whales temporarily pump the market, this is not really a problem. No one gets upset by this, only people who are short the market, and especially leveraged shorts. So what I would suggest, the short-term dynamics have zero influence on the long-term price of Bitcoin. You can go back and read about whales who crashed Bitcoin from 200 down to 150 a few years back. Does it matter now that Bitcoin's trading at 65,000? It doesn't matter at all. It only mattered if you had weak hands and you dumped your Bitcoin because you didn't understand what Bitcoin was, that it's this asset that you should hodl forever and pass on to your children and grandchildren. Bitcoin, unlike any other currency that we know of, had an immaculate conception. It had a pure conception because it was the first of its kind. If you try to launch a new coin now, there's no way to have a fair launch and a fair distribution. Simply everyone knows the game now. There's always insiders, there's VCs, and there's always a pre-mine reserved for insiders. And Ethereum really started this with their launch in 2015 and their huge allocation to insiders and at the pre-mine and the pre-sale. So this is one of those things I've said many times, digital scarcity can only be invented once. And this is the reason for it. You can create your own Bitcoin that has double the size of blocks, or you can create your own coin that's more centralized and faster. But there's no way to get the same fair distribution. This can only happen once. As a result, the tokens that we see launched these days have huge allocations to insiders. We have Solana at 48%. We have Avalanche at 42%. These red or pink parts of the circle include the team, company, and VC purchase tokens. So this is the ultimate definition of insiders. And this is what modern, we can see Binance here at 50%, Polkadot 33%. And so this is what happens when you try to launch a coin today. And there's really no pretense anymore of trying to be innocent about it. I made a video a couple of days ago, which I'll link to below, about Solana billionaire VCs laughing about how they're going to dump their coins on dumb retail investors. This is really the seamy and dark side of the cryptocurrency industry. I'll conclude by saying that Bitcoin is the first time in history that I'm aware of where the little guy got in first. Usually something's invented by Wall Street or pushed by Wall Street. People on Wall Street insiders, institutional investors, billionaires load up, and then they pump it and sell it to retail investors, dump it on naive retail investor bag holders. But Bitcoin really had a different path. Bitcoin was widely adopted by small holders, by retail investors from really 2012 to through 2017 and through the present. And it's only been in the last year or so, the last year and a half, that we've seen really large Wall Street insiders, billionaires, institutional investors get into the market. So Bitcoin is very special this way. It's quite unlike something like Solana, where you have the billionaires get in first and the VCs get in first and then dump on you. This is quite different, where there's so many of you, especially people watching my videos, who tell me all the time in DMs and in YouTube comments and emails how they bought Bitcoin back in 2013, 2014, 2015. And many of these people are quite wealthy now, but they were not back then. They just had the foresight to buy and hodl. We're still very, very early in Bitcoin. These sort of returns are still possible. It seems hard to believe when Bitcoin has a market cap of $1 trillion. But when you realize how Bitcoin is going to eat the entire world and is going to become the universal store of value, where not just current holders store their wealth, but all future inventors, future entrepreneurs, also store their wealth as a hedge against inflation, as a shield against central bankers, and as a very secure place to put their savings. So even though the price of Bitcoin looks very high right now, the price of Bitcoin has always looked very high. Everyone always thinks they're late to the game. And yet, if you own Bitcoin now, a couple of years from now, looking back on it from 600,000 or 6 million, people will envy what a small price you paid for Bitcoin, or what a low price you paid. Again, it's important to remember as well, you don't have to buy a whole Bitcoin. You can buy a piece of a Bitcoin, a small piece of a Bitcoin. Each Bitcoin is divided into 100 million little pieces called Satoshis or sats. So you can even buy, I think it's about 1,500 Satoshis right now. You can buy 1,500 Satoshis for $1. So this is really something that anyone can invest in, and you shouldn't be misled by unit bias. People who say you should buy XRP or Cardano because you can buy them for a few cents or a few dollars. This is simply related to the fact that there's so many of their coins printed up. So for example, for XRP, I believe there's 100 million coins or is it 100 billion coins? Either way, this is how altcoin promoters do it. They print up a ton of their coins, and so each coin looks like it's very cheap individually. So to conclude, Bitcoin is not controlled by the rich and powerful. It may be manipulated by whales over very short-term time periods, but it is a very robust protocol. The rich and powerful tried to change that protocol in 2017 and failed miserably. Bitcoin is a project that no one can control, and Bitcoin will continue to eat the world. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.